In today's world of market volatility and uncertainty, your retirement plans need to be front and center. With ever-changing tax laws, healthcare worries, and an unpredictable stock market, don't overlook the vulnerability in your retirement planning. Protecting your family and estate will be difficult with shifting policies in Washington. It's more important than ever to keep an eye on retirement.
Hi, and welcome into Eye on Retirement, the weekly show that keeps you in the know about all things retirement. I'm your host and financial advisor, Rick Everett, and if you're joining us for the first time, welcome in. If you're one of our many regular viewers, welcome back. We've got the full complement of panelists here for this episode. To begin with, Julie Newton, a financial advisor with Market Advisory Group, Pat Dougherty, CPA with Market Tax Services, Cory, a Market Medicare Advisor, and Gerald Eidelman, an attorney with Eidelman Law Firm. Everyone, welcome in. During the show, Julie, I'd like to spotlight about the importance of having a retirement plan and how that plan needs to include all aspects of retirement. However, you said you recently sat down with a client that didn't have an entire team working for her when she needed it most.
Absolutely. So Diane came to us pretty concerned because she had just settled her father's estate. And in doing so, her trustee of that estate had advised her to cash out her father's IRA, all pre-tax dollars. And so that money, since it hadn't been taxed, was going to create tax consequences for her. And so she was concerned about what those ramifications were going to be.
And is this an example of one of those cases where you turn to another member of the team before you even start digging into the portfolio?
Absolutely. It definitely is. Part of our job is to assess what the needs of each individual person is and then kind of go from there. In Diane's case, we had to absolutely talk to Pat with Market Tax Services first to make sure that we knew what was going to happen in terms of those taxes and how she could plan.
Now, Pat, when somebody goes to cash out an IRA, there's a 60-day window where they could actually roll that over into another IRA. But what was your conversation with Diane like?
Well, you're right about that. If it's your own IRA, you have 60 days to roll it over. But she inherited an IRA. And if you inherit an IRA and take money out, you can't take it back. There's no 60-day window. So she was just stuck where she was. And that made for a very unpleasant conversation with her. She had like $236,000 that was all going to be taxable. If she came to us sooner, we could have spread that over 10 years. She could have $23,000 every year be taxable. But since it all hit, she had to pay $60,000 in tax in the first year, and she was not happy with that. If it was only $23,000 a year, her taxes would have been a lot less over the entire 10 years.
Now, in an inherited IRA, could she have done a direct rollover?
Yes, she could have done that, yes.
And that would have avoided,
yes.
would have avoided all the tax consequences,
Right.
or deferred, I should say.
It would defer it, yes.
Julie, tell us more about the story. You said that there was a lot more. This was just the opening act, if you will.
Right, absolutely. So part of it was that she had this large amount of cash setting aside. And part of it came from the distribution from her dad's beneficiary IRA. And so she wanted to invest that money, but she couldn't do so until she knew what those ramifications were tax-wise. And so we had to sit down and kind of go through, kind of map out what the plan was, figure out what services she needed first before we actually tried to begin to help her. And ironically, Diane wanted me to share this story with others because, she knew that there was a problem and that she should have, sought assistance before she just took that distribution. But she knows that, a lot of people don't understand what those consequences are, what their options are. And so she came to us wanting to work with the entire team because she knew she needed that entire team, whether it's the estate planning, whether it's the Medicare or the tax planning, she knew she needed the entire team to work with to kind of help her navigate the situation.
Now, Pat, being a CPA with Market Tax Services, I would guess that more often than not, you have people that come to you after the problem has been created, when in fact, this could have been a completely avoidable situation, no?
This one could have been avoidable to make it less taxable for her. Yeah, if she rolled it over into her own IRA, then it would have saved her quite a bit of money. But like I said, on an inherited IRA, once you take the money out, you can't put it back in. And we were just stuck. We couldn't do anything for her.
Right, the 60-day window in that case just absolutely is non-existent because it doesn't apply.
Right.
Tell us a little bit about in the fall when you bring clients in that are already clients and do tax planning. Is that where you address situations similar to this?
Yeah, very much so, yes. It's always nice to come in before the end of the year to do current year tax planning, but it's best to come in and do tax planning over several years so that we could really get a good picture or look at the whole picture and help them out with their taxes. But yeah, after the first year, there's hardly anything I could do to save you taxes on last year's.
On the year prior.
Right. Yeah.
Right, because you're just out of time.
Right.
Exactly.
The clock has stopped.
So Julie, in a situation like this, Diane actually came to you and said, hey, please illustrate this story on the TV so other people won't be making the same mistake.
Right, absolutely. You know, it was really funny. We sat down, and I would say probably the second or third thing she said to me was, you know, I'm a great story for things like Eye on Retirement and Retire Hour, because this is something that I feel like, you know, probably happens to other people. And, you know, if I can help prevent other people from going through this tax pain, then that was something that she wanted to be able to do. So you really have to sit down and have those conversations in terms of planning to make sure that you're absolutely prepared. And, you know, as Pat indicated, we don't just plan in the moment, we plan years in advance.
You know, retirement is a team sport, and coming to the team after taking individual actions, a lot of times there's nothing that can be done as far as undoing what you've done. Do you have a whole team looking out for your best interest? And if not, what part are you missing that could end up costing you money sooner than later? At Market Advisory Group, we practice the holistic approach to retirement planning, from the financial aspects to tax planning, estate planning, and Medicare advising. And we do it all under one roof for your convenience. If you'd like to set up a complimentary, no-obligation consultation, operators are standing by to take your call right now at 316-252-8707. And be sure and check out our website at ionretirement.com. There you can watch past episodes. We'll be back with more Eye on Retirement and what happened with Diane next, right after this.
When people work with Market Advisor Group, they get a feel of sense of family. There's a lot of relationships that are made and going on in this conference room, and we really take a lot of pride in that and a lot of satisfaction in that.
Every client we work with, we make a custom-made plan to fit them and help reach their goals in life. Another thing that makes us unique is we want to meet regularly with our clients and have reviews.
Market Advisory Group, we have a process, and the process we take people through is first to understand what they have, understand who they are, and then we put together an income plan for them and show them how they can look forward to retirement and not look, though retirement is going to be a stressful time. It needs to be a stress-free time.
A few unique features of working with Market Advisor Group is holistic in-house financial consultants. We've got an in-house CPA, Joshua, an in-house estate planning attorney, Gerald, an in-house Medicare advisor, Bill. We rely on all of those professionals for, again, additional service within our consultative process, making sure that We've got the advice and the expertise behind the recommendations that we make.
You know, as an advisor, I'm not there to sell them one way or the other. I'm there to educate them, to let them know what their choices are. Then I try to help them make the right choice where they can save money and feel confident in their decision.
Absolutely the best part of my job is getting a stack of paperwork from somebody and they don't know what to do, and then I can turn around and give them back a tax return, but also to be able to explain what they can do next year that will give them a better answer than what they had this year.
When we've got clients that are calling and they need to help out a child or need to help out a grandchild or need to help themselves out and they're in a situation they didn't expect to be in, I really relish the opportunity to help them through that, help them make the educated decisions in somewhat stressful situations, because a lot of folks don't have that type of counsel.
We meet with so many people one-on-one in this office that don't ever end up becoming a customer or doing business with us, and that's okay. But when they leave our office, we know that we've helped them either get some answers to some of the questions they had or get some clarity on maybe their own path.
But one of the things that we hear all the time is, I wish I would have met you guys 10 years ago, because how much further could I be down the road? Well, Johnny Appleseed said, you know, when's the best time to plant a tree? 10 years ago. When's the second best time? Today. And so if we can help people today going forward, that just brings an incredible amount of comfort and excitement for us to come to work every day.
Welcome back into Eye on Retirement. In the last segment, we were telling you about a little ditty about Tax and Diane, and we were discussing the cautionary tale of Diane and a large pre-tax distribution, which caused her an unnecessary tax bill. But Julie, as you tell it, was the tax bomb where it all ended?
Absolutely not. So unfortunately, those pre-tax dollars, when you take a large amount out, it's kind of like a snowball rolling downhill. It just consumes everything in its path, and it absolutely affects other things. So, you know, and it isn't just the pre-tax accounts, it might be the sale of real estate or things like that. And so what we have to do at that point is we have to kind of take a look at all of the different pieces that are going to be affected by it and start developing a plan, you know, making sure that Diane was meeting with all of the right advisors so that she can make sure she had the best plan for her future.
Now, was Diane on Medicare?
No, she was getting ready to start her Medicare, and so she needed to have a conversation, obviously with Cory, with Market Medicare Advisors, to kind of get that set up for herself, and then to obviously kind of start to understand what those ramifications were going to be.
So, Cory, Market Medicare Advisors, share with us, if you will, what can happen to somebody who is on Medicare that has a sudden fluctuation in income?
Yeah, absolutely, Rick. So situations like Diane's are not uncommon. Whenever you're getting ready for retirement, we see people that may have owned a business or had several different rental properties, or maybe decided to cash out some retirement accounts, and never in their life have they made that amount of money that they report on their taxes, aside from the year before they go to start Medicare. Now, what that does is Medicare has what is known as IRMA, or your income-related monthly adjustment amounts. And what IRMA can do is IRMA can triple what your Medicare premiums will be on a monthly basis.
Explain that for those at home. Triple, meaning they can be 3 times greater?
The standard Part B premium for 2023 is $164.90. If you make it to the top of the IRMA bracket, you could pay over $500 a month for Medicare. Now, you don't get extra benefits on Medicare because you're paying more. You're simply paying more because you reported more on your taxes. Now, that can be a situation that can be difficult to unwind. You actually have to go and be proactive in talking to Social Security and explaining that situation if it was a one-time payoff. Now, if you have consistently been over those earning limits, you can be stuck with Medicare IRMA charges for up to 1 year. Now, after that year, Social Security will not come to you and say, hey, we saw that your income dropped last year, so we don't need all of this extra money from you anymore. Absolutely not. You have to file with them and alert them that your income has dropped.
Now, is this information that all retirees should like automatically know?
Absolutely not. And in fact, a lot of times whenever I'm visiting with clients that have just started Medicare and maybe not visited with me beforehand, they'll just have the question, why are they withholding so much money from my Social Security check? It's not something that they give a lot of warnings about, but they will slap that extra amount on there.
So the average person, to become knowledgeable when there's so many ins and outs, they pretty much need to be talking with a professional.
They need to be talking with somebody. Whether I'm that right person or not, they need to have somebody that is up to date on the Medicare information, especially because those IRMA brackets are constantly changing over time, rising or lowering on a year-to-year basis.
You know, Julie, Market Advisory Group, Market Tax Services, Eidelman Law Firm, Market Medicare Advisors are always out and about in the community trying to inform people.
Absolutely. So we spend a lot of time doing workshops, primarily because you mentioned earlier, you wondered if people were surprised or unexpecting those kinds of changes. And absolutely, that's true. I'm always amazed how many people are apologetic because they don't know everything there is to know about their own retirement. And so, one of the things that people need to understand is if you're not working with a complete team, if you're not working with the tax professional, Medicare advisor, tax professional, as well as the financial advisor, all as a cohesive team that works together, then you're probably not getting all of the information that you need. And so absolutely you're going to make mistakes and run into problems. But if you have that opportunity to work with a complete team, then you have the chance to avoid these, as you called it, tax bombs, and kind of save yourself a lot of heartache tax-wise.
Or maybe afford them also.
Maybe so.
Now, did you eventually get to the point with Diane where you were going in and making financial adjustments with her portfolio also?
Absolutely. So, once we had the tax piece figured out and she understood all the ramifications because of those pre-tax dollars, then we were able to sit down and actually kind of look at her portfolio, figure out, okay, this is how much you need in terms of withholding enough so that you can pay your taxes. And then, of course, once that happened, then we could start looking at her portfolio and kind of planning, so that we could take care of her own pre-tax dollars for the future, because she was going to run into a similar situation herself with her own pre-tax accounts.
Now, hopefully she's on the calendar for September, October, November to
Absolutely.
meet with Pat
Absolutely.
and take a look at financial activity in review for 2023 so that we can avoid another tax bomb in 2024.
Absolutely.
When we come back with our final segment, we'll hear more from our team on how to prevent an inheritance from becoming a real issue for the beneficiaries. Do you have that whole team looking out for your best interest, from financial advice to tax planning, Medicare advice and estate planning? And if not, wouldn't it be better to meet with them before than after you realize something you may have done wasn't in your best interest? At Market Advisory Group, the whole team comes to work for you and works for your benefit. If you'd like to set up a complimentary, no obligation consultation, operators are standing by right now to take your call at 316-252-8707. And be sure and check out our website at ionretirement.com. We'll be back with the final segment of this episode right after this.
How confident are you in your current financial plan? Do you know with certainty how the recent market volatility will affect your future hopes and dreams? How much are you paying in taxes? And how much are you losing to unnecessary high fees? You didn't work to save this money so that you could spend your time worried in retirement. Now is the time to take charge of your finances so you can feel confident about your future. Call in during the next 30 minutes of today's show only. to set up an absolutely complimentary, no obligation, full-blown financial review that will result in your own customized written plan. This is a $999 value that we're giving away complimentary to the first 10 people who respond. We'll start with a full-blown analysis of what you already have. By running a report to untangle how much you are currently paying in fees, how you're allocated for risk, and what it's costing to work with your current advisor. Next, we'll identify your goals. Where do you see yourself in the next 5 years? Where do you want to go, and who do you hope to go there with? Is your current financial plan set up to get you there without mishap? Let's design a roadmap to create a financial plan you can follow with confidence. Get the piece that so many people are missing from their retirement. Find out how having a written plan can make a difference to your retirement dreams. Call now to schedule your complimentary, no obligation, full-blown financial review today.
Hi, and welcome back into the final segment of this edition of Eye on Retirement. In the prior segments of this show, we've been talking about Diane's story and how her previous advisor recommended taking a full distribution from an inherited IRA as a non-spousal beneficiary. Julie, tell me, this all could have been prevented, correct?
Absolutely. What is the saying about an ounce of prevention? So it could have started with a little, preparation in terms of whether it's the owner of that pre-tax account or whether it's the beneficiary once that owner has passed and they've received it. But you have to be working with that complete team to, kind of plan as far as taxes are concerned, the Medicare piece, and of course, it all goes back to the estate planning. Are we setting up our estate such that if this is my account, that I am prepared? Am I ready for, the money that's being passed to me? Am I ready for what I'm going to pass on to my own beneficiaries?
Gerald Eidelman with Eidelman Law Firm, it would appear that the ounce of prevention begins with estate planning. Can you share some of the estate planning tools that you could use to help someone with like Diane or even her father?
Absolutely. I mean, one of the biggest planning tools that we have is creating IRA trust to hold retirement funds. In those trusts, the owner or the participant of the plan can provide for their heirs and have it set up so that payments go out over time rather than leave it up to the heirs to take whatever money they want to. The importance of that obviously is, in a case like Diane, where she didn't have that limitation and didn't have better advice, it just meant that everything was taken out without consideration. When you set it up in a trust and you limit the amount the heirs can receive, or you make it distributable in certain portions, then they are never going to get stuck in a situation like Diane. They're never going to have this huge tax bill at the end of the year because they're not going to withdraw all of the money. They can withdraw it over 10 years, and you can set it up in increments to be paid out over ages, and whatever choice you want to, or limits you want to put into, you can, which is not something you can do if you just leave the retirement accounts directly to the beneficiary.
Now, can a person who is drawing up their trust, can they set it up so that from the grave, per se, they're actually allocating funds every year to just transfer from the decedent's trust into the beneficiary trust? So that
Oh, absolutely. Yeah. I mean, that's the beauty of having a trust, is that it gives you complete control after you're gone as to how your assets are left and managed. And so you have that opportunity to be able to provide for, I would say, the advice you have to the next generation that may not have the knowledge on how to handle their money. And so, yeah, it's definitely a great opportunity.
So, to people who are really into the planning phase, do they ever have like the beneficiary accounts set up even before they're passing?
Well, that's what we try to do. I mean, the number one question that always comes up when you're meeting with a client and they have retirement accounts, or really any account that requires a beneficiary or can have beneficiary designation, is have you checked if you have the beneficiary set up the way you want to? It's amazing how many times it happens that beneficiary designations don't get carried over for some reason, some clerical reason, or you have a beneficiary from 20 years ago, your ex-wife. So when you're doing your estate planning, it's really the best time to just go back to your advisors and double check that all your accounts have the proper beneficiary designation. If we do a trust, the beneficiary would be the trust rather than the individual heirs. And that's how we would control the output of the retirement account.
It seems like around the conference tables of Market Advisory Group, I've been meeting with a lot of first-time clients lately that are in their 60s, some in their 70s, with either no estate plan or a will that was drawn up over 10 years ago. What do you say to those people?
Well, I see most of my clients, I would say, are up in the 50s and 60s. I think it's just kind of a bug that comes over to people as far as time is ticking and I need to do something about it. And we engage in a long conversation, with financial advisors, the tax advisors, Medicare advisors if necessary, in order to create a estate plan that fits their needs and what they're trying to accomplish.
It's often been said that for every action, there is a reaction. And when it comes to retirement and planning, from the financial aspects to the estate planning, Medicare planning and advising, as well as tax planning, there are a lot of pieces that come together that make up the entirety of the picture of a proper retirement plan. But missing just one of those components can throw the rest askew. Do you have a whole team looking out for your retirement plan? And if not, isn't it time you talk to one? At Market Advisory Group, we practice the holistic approach to retirement planning, from financial to estate planning, tax planning, and Medicare advising, and we do it all under one roof for your convenience. Operators standing by to take your call right now at 316-252-8707 for a complimentary, no-obligation consultation. That's all the time we have for this week. I'm Rick Everett, reminding you that we're here to keep an eye on retirement.
This broadcast is intended for informational and educational purposes only. The views, statements, and opinions expressed herein are those of the individual speakers and not necessarily those of Foundations and its affiliates. The information contained herein does not constitute an offer to sell any securities or represent an express or implied opinion or endorsement of any specific investment opportunity, offering, or issuer. Any discussion of performance or returns are not indicative of future results. Each individual investor situation is different, and any ideas provided may not be appropriate for your particular circumstances. Foundations only transacts business in the states where it is registered or excluded or exempt from registration requirements. Registration as an investment advisor is not an endorsement of the firm by security regulators and does not mean the advisor has achieved a specific level of skill or ability. Legal services are offered by Eidelman Law Firm. Tax services offered by Market Tax Services. Market Advisory Group does not provide legal or tax advice. Investment advisory services are offered through Foundations Investment Advisors, LLC, an SEC-registered investment advisor.